Welcome to this week's Global Market Outlook, your go-to source for navigating the financial markets. I'm Tolga, and today we will unpack last week's market moving events and preview what's ahead for the week of May 26, 2025. From US tariff threats to central bank decisions and key economic data, we have got a packed agenda. Let's dive in. Last week, markets faced turbulence driven by US policy shifts and mixed economic signals. US equities retreated, with the S&P 500, Dow Jones and Nasdaq each dropping around 2.5%, erasing prior gains. The S&P 500 is now 5.6% below its record high from 3 months ago, pressured by President Trump's proposed 50% tariffs on EU imports and 25% on iPhones unless Apple relocates production. Treasury yields spiked, with the 30-year bond hitting 5%, its highest since 2023, after a weak 20-year bond auction and Moody's US debt downgrade, reflecting deficit concerns. In Forex, the US dollar weakened, with the DXY falling to a 4-week low of 99.10, down nearly 9% year-to-date. Bitcoin, however, continued its rally, climbing 6% to $109,000, nearing its record high. Gold rebounded strongly, up 6% to $3,360 per ounce, extending its year-to-date rally. In commodities, oil markets remained volatile as OPEC Plus considered a larger-than-expected output hike. Globally, Europe's STOXX 600 dipped 0.75% amid tariff fears, though the UK's FTSE 100 gained 0.38%. Eurozone PMI contracted to 49.5, and the European Commission cut its 2025 growth forecast to 0.9%. Japan's Nikkei fell 1.57% as the yen strengthened to 143.6 against the dollar, while Chinese Hang Seng rose 1.1% despite tariff pressures. US housing data disappointed, with existing home sales hitting a 2009 low, though new home sales beat expectations at 743,000. Let's look at the week ahead, starting with Monday, May 26. US markets are closed for Memorial Day, and the ASEAN summit kicks off in Kuala Lumpur, potentially influencing regional trade dynamics. On Tuesday, key US data includes S&P Case-Shiller Home Price Index, expected to hold steady at 4.5% year-over-year, and the Consumer Confidence Index. Durable goods orders are projected to decline 8% month-over-month, signaling manufacturing challenges. France reports preliminary CPI, which could impact euro sentiment. Wednesday is packed. The Federal Reserve released its May FOMC minutes, offering insights into its 4.25 to 4.50% rate stance amid tariff-driven inflation risks. Nvidia's earnings are a major focus, with an expected EPS of $0.92 and revenue of around $43 billion. Watch for guidance on AI chip demand and US-China export restrictions. The Reserve Bank of New Zealand is likely to cut its cash rate by 25 basis points to 3.25%, while Australia's CPI is expected to soften to 1.9%. OPEC Plus holds its GMMC meeting, potentially confirming a 411,000 barrel per day output increase. Thursday brings the second estimate of US Q1 GDP, expected to confirm a 0.3% contraction, alongside weekly jobless claims and pending home sales. The Bank of Korea may cut rates by 25 basis points, and South African Central Bank is expected to hold steady. Costco and Salesforce report earnings. On Friday, the US PCE price index, the Fed's preferred inflation gauge, is forecast to slow to 2.2% headline and 2.5% core, potentially supporting 50 basis points of rate cuts in 2025. Canada, Brazil, and India release Q1 GDP, while Germany, Japan, Italy, and Spain report preliminary CPI. Chinese MBS manufacturing PMI is expected to edge up to 49.5. To wrap up, markets are bracing for volatility driven by US tariff threats, Nvidia's earnings, and critical inflation data. The Fed's minutes and PCE report will shape expectations for monetary policy, while global central bank decisions and economic indicators add to the mix. Stay sharp, traders. This week could set the tone for June. What's your take on how tariffs or Nvidia earnings might impact markets? Drop your thoughts in the comments below, and don't forget to like and subscribe for more weekly insights. See you next Sunday.